Hey everybody, welcome back. We have a lot to cover, so we're going to jump right into it. We saw the S&P 500 sell off. Technically, we were okay until later in the day. Let's drill into this and start right there. And then we're going to get into some headlines here on what exactly the heck is going on and why we saw these massive swings. Now, a lot of people are going to say that it was Powell. Frankly, it was pretty much a non-event for him today, despite some of the interruptions there were just kind of humorous. But you were in this range, and every time you popped out of our little range here, this 43.50 to right down here, this 43.20, you can just see how we were locked in. And this is just a level that was support, and now it's becoming resistance. And we don't really want to see that. And we're going to take this now, and we're going to just draw it straight across, and you'll see exactly what I mean. So this was being support before, and it's just not anymore. And that's going to be a problem for us. It's something we're going to have to deal with. And I'll make it go back a little further here so you can even see what I'm talking about. And you can see there. Now, what does this mean for us? Well, it means that we have an issue. We talked about this possible little mini head and shoulders in the DTL. All right, so we cracked. We tried to get through it. Great. Now what? Well, the first thing we're going to notice is what the heck happened here? What was the real driver? Well, there were a couple movements politically that happened, meaning movements going on, escalation with the war, and we're going to talk about them. Now, I'm going to preface this with a statement. I am far from a geopolitical expert. And what I'm simply pointing out is this is what happened. I am not making any case for it. I'm not saying anything about it. These are the facts, and this is what we're dealing with. So the other day, U.S. officials say 100 to 300 killed in Gaza hospital explosion. There was an explosion at a hospital. How it happened, I'm not going down that rabbit hole. But this set off an escalation. This escalation today started to exacerbate right in here. And what started happening here and then what started happening here became very clear. U.S. Navy destroyer in Red Sea shoots down cruise missiles, potentially heading towards Israel. At first glance, we didn't know where they were going. This is coming out at 6:30 tonight. I waited a little bit to read through some of these articles to just see if we could get some clarity on what's going on with the market, because this is going to affect the market. It's really that clear. We're going to go back to the stool in a moment here and start dealing with the fact that it's not technicals that are driving this. You're not looking at a head and shoulder. That's why we cracked. We have geopolitical events that are shaping the technical landscape right now and affecting the risk premium of the market. We're going to address what to do about that this weekend. But for now, we have to get through tomorrow. And then we're going to talk about Saturday, and we're going to lay out and map out an entire plan for what you need to look at as far as risk premium, et cetera, et cetera. U.S. troops attacked in Iraq and Syria, and they were by drones. So this seems to be the reason that this is happening. Now, whether or not that's the case remains to be seen. But this is what we're dealing with. This is why we sold off. Wasn't Powell saying we're going to raise rates again or anything along those lines? Far from it. I mean, he almost had like a mea culpa today where he was saying, I probably could have moved a little faster. I probably could have done less during the pandemic. And he really kind of was pretty honest about the situation and almost saying, yeah, maybe I did screw up. And I was very surprised by that, but it is what it is. And it's actually a good thing, because if you realize what the issue is, then you know how to address it. Again, it is what it is. But this is why we dropped. I want to just go through the basics again. You have a declining 55. There's nothing to say, right? There's nothing for us to get too excited about here. We have a declining 55-day moving average. We have the RSI that is well below 50 and rejecting. So we cannot look at this and get excited. What we have to do is say, what levels do we need to watch tomorrow, and can we get there? This 42.50, yeah, you can get there. Now, to me, I don't see any reason at this point that we don't get some kind of movement to retest the 200-day moving average, which puts you right at that 42.61. I just don't see how it doesn't happen with everything that's going on. We have a blow up this evening in one of the sectors, and we're going to talk about that. It's crushing these names after hours. We're seeing weakness after hours, which I expected based upon what we see going on out there. We're going to talk about Tesla, a short, and then how to understand nuances. This is going to be really important. How to read nuances in the market when you're getting stuck and you don't know where to enter. You're going to want to watch this a couple times. But that one part you're going to want to watch a couple times. But this is it. You're wedged in. I wish I had better news. I have to trade what's happening. I've been saying for some time, I think by the end of the year, that we were going to take out the highs. I've got 10 weeks left. I've got 2 wars going on, and this one's escalating. I have a 10-year that's hitting 5%. It's not looking like I'm going to ring that bell right now. Weirder things have happened, but as we get through earnings, we have to start saying to ourselves, what's the impetus that's going to get us there? And we have another sector that cracked, and we should probably go through that tonight so that you're prepared for tomorrow instead of me doing that on Saturday. But I'm going to go through that on Saturday, and I walked everyone through this about a month ago, but that's coming home to roost right now, and you're going to want to start going through those names. But You look at the NASDAQ, I've got a declining 55. I don't really feel warm and fuzzy about that. That's what warm and fuzzy looks like, and it's certainly not that. So as we can see here, we're probably going to come back to that level. At least I made myself laugh, 14.6. That needs to hold. And we keep hearing about this, this head and shoulders. We've been talking about this head and shoulders since June. You could have grown tomatoes at this point. But what I'm getting at here is that we don't know that that's going to break. It does seem likely that we're going to get there. So we have to think about it from that perspective. But this is really, it's really one massive puzzle. And we're putting all those pieces together right now. And when we look at how this is acting, it's not ideal. But if we have escalation, it changes everything. It changes the landscape of how we move. Now, one of the things we started looking at was the XLK and saying the XLK looked like it was going to break out. Well, people are not going to be out there. And remember, 45% of this is Apple and Microsoft. People are not going to be out there looking for their new iPhone while this is going on. If this starts to escalate, people start rallying the wagons. They start socking money away. They do not sit there and say, you know what we need to do? We need to go on that vacation. I need that new phone. I need that new purse. They start saying, what's going on here? Do we have to worry at home? And that's what everyone's always worried about. But if you see this DTL, downward trend line, this is what we're dealing with. If we clone that downward trend line and we just see where that fits in, if it fits in anywhere, and frankly the best spot for it is here with this being an undercut. Now if let's just play devil's advocate and let's say that is our channel, that is our lower channel, well then we can get down to here on the XLK, which is an absolute bloodbath for Apple and Microsoft. And now what we have to do is go through those names, and this is the rub that you're dealing with right now. This is what you have to understand. We can look at this technically, we can look at this fundamentally, but if we bring out the stool for a moment, the game's changed, and the game's changed because of what we have going on politically right now. Geopolitically, everything is macro. We're not just focused on macro. If we're on this stool and we are leaning full bore right now here. Everything is changing, and when you have this level of uncertainty, what tends to happen is the following. When you have this level of uncertainty, you're on a hair trigger, because you don't know what that move is going to do to the next move. So when you see names like Apple try to get through the 55, and we're getting rejection, for those that don't know who Matumbo is. And now look at you. You don't think you're going to test that? I just don't see how we don't test that at this point. And I'm saying that not because technically things have changed, but when we have escalation like this, who in their right mind is saying, you know what I really need to do? I need more tech exposure before this weekend so that I'm really locked in case something happens politically or in this war escalation over the weekend. No one is going to say that unless this stuff really sells down, which it very well could tomorrow. You could see that. And the VIX is actually pointing to that. Right? Look at the VIX and how it finally started to move. You're up 12%, 11.4% in the VIX. You're finally getting a move. Forget my lines here for a minute. But you're finally getting some kind of positioning. Now, I need a 30 in the 30s before I can get here and say, all right, I have something. But we have to look at this and say, do we want to be buying puts? If you are, you better be playing hot potato with them, or you better be in the right sectors, because we know that the risk premiums on those options, the implied vol, is about to go through the roof. And that's something else that we have to look at. But you need to look at this and say, how bad can this get? Where are we? And how much worse is it? Well, if we take a look short term at our short-term indicator of the S&P stocks above the 5-day, to be at a possible bottom, you need to be in this range right here. This is where your possible bottoms come from being grossly oversold on the short term, right? You need to get to that 5, 6, 7 level. You're at 17. So you can go lower, and you start looking at these trough valuations. This is the 20. You're nowhere near a trough valuation. 21. The last trough valuation was 6 or 7. And that's where these trough valuations are on the 50-day, right up here. And we're not seeing that. Look at the 200-day. Now, the 200-day, you might be getting to some kind of level, but where are the real lows put in? 10, 11, 12. Right? Where are we? 35. So we have, if this really wants to sell down, we have a ways to sell down. We have 3 sectors, 3 that are above their 55-day moving average. That's it. That's all we have. And we should talk about this. So let's get rid of the 22. Everyone knows I use a 22, a 12, and a 55. You can hopefully you start to see how this is all connected. But these are the best balance sheets out there right now. Google, Meta, right? And we just go through them and look at them. Google looks like it doesn't have a care in the world. Meta, that's starting to look a little funky, but you see that where you're at right here on the RSI, right down there. Let me point that out, and you'll see it. Okay, you might want to keep your eye on this one. This is not ideal. It's not that devil horns pattern, but we're staring at it. And do you think you could see 311? Yeah, maybe you can. You have some other moving averages up there, but are they going to have the same level of support that institutions are going to possibly have? Possibly not. So we need to look at this and say, okay, well, is Meta going to come in? And then we start looking at Netflix and wrap your head around this noodle. Look where we stopped. We stopped right at the 55. I use a 12, a 22, and a 55. You should use what you're comfortable with. So here we are. And we rejected right on the 55. And what else bothers me about that bar is we couldn't get over the open, which means I had net sellers on the day. This was maddening for me to trade today because it was a blowout quarter, but it couldn't get out of its own way because it was such a massive move. And I really thought we would see more of a squeeze. And quite frankly, we just didn't see what I thought we would see. It was fun trading it after hours last night, but this today, trading wise, I had a much better evening trading after hours than I did here for obvious reasons, and you can see that by there. But we're going to get into Tesla as well. But let's roll this back. So what are we seeing? Okay, so we're seeing the energies. They're above the 55. XOP's above the 55. Look at XLK. We don't have anything left, guys. We don't have anything left. Industrials are dead. Okay, XLP's dead. Healthcare's dead. Utilities. Now, when I say dead, I'm not saying that you can't buy them, but basic materials. Everything will slow down. Borrowing will slow down. Biotechs, I mean, some of them are trading at cash. Now, XLY is the one we have to go over. Why? Because this has travel in it, and we're not going to go through all these names. We are going to cover them on Saturday. This has travel in it, and this is consumer discretionary. Nothing gets hit harder than consumer discretionary. Nothing if we go and this escalates. And look at this today. We just broke the 200 today. If you take nothing else from if you take nothing else from this video, and I have to leave that in, I'm not editing this evening. It's been a long day. So you can see right in here, and you broke. There's nothing that you can do here now. What are you going to say? We're going to hold? Why? Someone's going to rush in and buy these names? Okay, so if we understand that, well, what's the largest one in there? Do you think Amazon's going to hold in here? Amazon might hold out of all of them. What's not going to hold? Names like ELF I'd be concerned about, but you're above the 200. So maybe start looking at those names that are cracking below the 200. I'm shocked that we're going to see like LEN still come down and KBH today. They're really coming in. Where do you see this? This looks god awful. NVR. Look at that. Like you can't find something that looks worse than that right now. You broke the year-to-date anchored VWAP and you broke the 200-day. Like this has just got train wreck written all over it. You might want to spend some time and look at what the actual NAV or book value rather is of that company. But when you start going through these, they look awful. Some of them are still above, some of them are below. But when you start looking and you put these pieces together, you start looking at which ones are below the 200. You might want to start running your XLY names and you might want to start looking at them. You look at your travel names, look at what's going on in your airlines. Who's getting on a flight right now? Who's going overseas right now on a trip? Not a lot of people. Okay, they're going to start putting things off. They're going to do things domestically. Keep that in mind. That's important. So you have this, and then you can start going, okay, well, what else? XOP. Okay, so we're going to have to start drilling domestically because that's going to be an issue. So now we're going to have gas and oil exploration that's going to wind up lifting. This is one of the names that we traded and doing okay with. You know, it really isn't a huge mover. It's not along the lines of something like the tankers were really moving, but they look a little toppy right now, quite frankly. And now there's more risk to the tankers. If things escalate. Like light escalation's okay. Heavy escalation means they might actually really have a problem. And that's a whole different can of wax. But we have 3 indexes that are up, and we could really come in hard if this market wanted to, if it's going to escalate. The other thing that we have to look at is if we look at the equity market and we just look at the put-call ratio on the Chicago Board of Exchange, and all this is equities. I don't look at the indexes. But if I just look at equities, I don't have any big spike here, despite where the VIX is. So what are they buying, right? Well, we know the VIX is related to what? That's related to the S&P. So it's not related to this, you're going to say. Shouldn't I see something commensurate with that? Shouldn't I see something that is close to that? And we're not seeing that. The other sucks salad is now we're close to 5% here on the 10-year. So what are we going to do with that, right? I mean, that's going to affect the risk premium. So they're selling our bonds, buying the 2-year. Fed funds is at 533. We all know that, or should know that. So what is this telling us? Well, this is not an optimal setup, and it's getting worse by the geopolitical events. And the geopolitical events are going to cause people to put money in money market accounts. That's what they're going to do. So if we know this, now we have to get into some of the names. Now, the one that I traded today and we did quite well with, it was actually my best trade of the day, was just shorting Tesla. We started last night and we just spent the day shorting it over and over again. And I want people to see this and see how easy this was as a read of a day. You did not have to get overly complicated. If you're interested, I can post how I traded this later. I can do it on Saturday's video. I'm not going to do it tonight. But if you're interested in how we traded this and how we kept shorting and finding spots, even last night, we were shorting this on the 240s. So this was just a home run. I actually had an option trade. I think we were up 3x in. Hold on one second. I'll pop this in for now so that you can actually see the timestamps and the date on when we actually did this, so that when I say that I did it, you actually know that we actually did do this and got in and did fairly well with it. So the purpose of what I'm getting at here is the following. This is Tesla. Once you saw this rip up and start breaking, and I would strongly suggest that you start doing this with all your positions. There is a lot of nonsense out there today. And if you're trading today, you saw the nonsense. The nonsense was strong. The flim flam was real today. And there's a couple of reasons for that. We'll get into it Saturday. But all you want to do is watch and see how you respond to VWAP and start selling those VWAPs. You don't want to sell the breakdown. That's not what you want to do. You want to sell when you're getting into the VWAP. I'm saying this because this is how you're going to want to look at the world tomorrow. This is how you're going to want to look at these names. I'm going to give you a bunch of names that you should probably pay attention to, that you're probably already aware of, some, but not all. You're going to really want to watch VWAP very closely tomorrow. What institutions are doing. You don't even have to watch the first half hour. We know it's retail. Maybe you don't want to take this trade like we did today, but when you get those secondary moves or tertiary moves, there's money there. And they're very simple trades, and they're very easy places to place stops. You just place the stop right above it. I did this one as well. I didn't catch this one. It was too wonky for me, quite frankly. But they're doing very well. If you go and look at your trades today, you'll notice this left and right on all of them. When they got to these levels, you saw demarcation lines today, more so than you're normally seeing. You had net buyers, and once it flipped to net sellers, that was it. It was done for the day. This is NVIDIA. You can pull up any of these names and you're going to notice it. You're going to notice this more today than any other day. And you had option problems all day today, and you had these swings. You had some names that weren't able to trade. But you can see that when you got rid of the nonsense, look what happens. Look what happens when it broke at 2:30, dentist's favorite time of day, but also when institutions start kicking in. So you want to watch this. Look at Microsoft. Look at how Microsoft held that open all day long. Watch what happens here if we just drop the VWAP right there. Look what happens when it starts to crack. All right. And you're seeing this all the time. Look at the test, the battleground, but you're seeing it more and more with these names. I can't stress that enough. If you're not using this, which every system has, I just basically put one on at 9:30 and leave it on. And usually I would tell you to use something else with it. I wouldn't even use anything else with it. I would be watching this right now, because this is telling you what institutions are actually doing with their positions. And you can see what they're doing with their positions. They're getting out. Now, we should probably talk about SEDG, because that's going to be the dumpster fire of the day tomorrow. I should probably get a crown for some of these names. But this was a really, really bad. So this was a really bad announcement, pre-announcement, and I thought this was humorous, so I left it in. Here's JP Morgan telling you an hour before the announcement that, yeah, we lowered our target, but overweight with 275. And then no less than an hour later, they're supposed to earn 909, but they're going to do 720 to 730 in revenue. That is an absolute disaster. I'm surprised you're only down 90. I'm surprised it's not down more, and go from there. I'm just going to be blunt. I'm really shocked that this is not down more than that. Look at their gross margins, 20%, 21% versus 31 to 28 is where they're supposed to be at. Lower after lowered estimates. Dumpster fire of all dumpster fires this quarter. Now, what this is going to do, this is going to take down the whole sector tomorrow. The easiest trade is to just short the sector, but the whole sector is going to come in tomorrow. There's very little doubt about that, and it's definitely something that I would be paying attention to. All right, I would not sleep on this. I would be paying attention to it, and I would understand that this is going to be a really bad day for these names. It's not going to matter which name, but you are way off. And people knew they were having issues because of the financial conditions, but First Solar will have an issue. ENPH will have an issue. They're already starting. If you start looking at these names, ENPH is already down $15. ENPH is down 15, and look at SEDG. That's down obviously substantially more, but that's a big move on some of these names. So you're going to really want to watch this. I do want to go through a couple of these other little trades, I'm going to call them. Let me get rid of this. So, I mean, this was a really nice trade for us, but what do you do with this tomorrow? And I really want to get this out. I would be looking for the next down cycle of moves. And I'm going to give you a couple that I think you need to look at just for trades. And again, it has nothing to do with the fundamentals of the company, although Tesla's a dumpster fire right now fundamentally. They have a lot of issues. And I appreciate everybody sharing these, and I would please ask that you do share them so that I don't have to run ads in the middle of these. It helps with the algorithm if you run the ads in the middle. I'm hoping that you'll share them so that I don't have to do that. The retweeting, the sharing, it actually compensates for the algorithm. And if you find value in it, I hope someone else does too. But watch this key level tomorrow. If you start breaking 213, you start breaking that doji tomorrow, that 212.36 would be the exact level. It's on, and you're just going to see the floodgates open. The only hope that you really had was the fact that you don't have a full red bar here, especially to the downside. I think that you have hope there. I would watch this very carefully. The one that looks to me like it's going to crack, and I was really very close to buying puts on this. It just looks to me like you were going to absolutely crack, was right here. I don't know how that's holding on. I really don't. If you take a look at this, we're below the 55, we're below the 12, we're below the 22, the RSI is below 50. I mean, I don't know how the heck that was down 17 basis points today, except the fact that it dropped a lot earlier this week, and everybody must have thought that it was going to crack. And then since we were all thinking it's not, now after hours, they're dumping it, but you just don't know how that's going to go. Is that because of what we're seeing with the solar names? I don't know. But to me, this looks like the floodgates are going to open. I would watch AMD as well tomorrow. That looks like pretty gnarly stuff as well. That could get very, very ugly as well. But that's actually holding in there better. You had really good news from Taiwan Semi. It was excellent news out of Taiwan Semi. You had Goldman defending ASML today, basically saying, why are you guys selling it? It was a great quarter. It is what it is, guys. It's not going to matter. You're going to go back to that entire macro geopolitical situation. It's just not going to matter. I will say this. I think these kinds of names, and I'm going to preface this, if you're looking for shorts, BNTX, mRNA, they're toast. They're absolutely toast. When they start coming out and lowering their guidance on vaccines, it's not like they're going to go up again. Okay, it just doesn't work that way. Because first they'll come out with something else. But second, I mean, that's just the way the pharma companies work. But second, when they come out and they start saying this kind of stuff, you want to be really, really careful. Lilly took it on the chin a little bit today as well. Let's pull this back. I don't really know why you're taking me to May, but they are what they are. And I apologize that this video is going to be raw, but it is what it is. Just way too much trading even after hours today. It was just very, very busy, and just trying to sort through all this was just nuts today. You see that level right in there? Like, why is that cracking now? I mean, why isn't Visor rolling over on that news? Now, it's finally starting to when they came out and said lower guidance. But, I don't think that that's the way to go about it. BNTX is a one-hit wonder. So getting that and putting that on and up a couple bucks in it, but I think there's more downside. And again, if you take one thing away from this, if you take one thing away from this video more than anything else, more than my cool little slides and diagrams, I would take away the fact that the XLY is sitting on the 200-day moving average. And if that cracks, and we take a look at something as simplistic as an anchored VWAP from 23 on, and just drop it right there, and you realize that on average, every stock now that is in the XLY and part of the XLY, you're down on, and you're below on average. You're also below the 200-day moving average. That's setting up for tax selling into the end of the year. That's it.